In this video, I am going to share with you why the recent gold rally might be signaling a Black Swan event for the economy. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers, with over 800,000 reads. I've also covered over 500 videos and over 250,000 watch hours as of September 2024. Gold prices have been on a tear lately, hitting new record highs and breaking through the $2,600 mark for the first time ever. This rally has been fueled by a few factors, including the Federal Reserve's recent interest rate cut and ongoing geopolitical tensions in the Middle East. But some analysts are warning that this explosive price growth could be signaling something much bigger, a potential Black Swan event for the economy. Now, what exactly is a Black Swan event? It's an unpredictable occurrence that goes beyond what is normally expected and can have severe consequences. In financial terms, it could mean a major economic downturn, a debt crisis, or even a collapse in other asset classes. One analyst on social media pointed out that gold hasn't behaved like this in over 20 years. The sharp rise in price is raising questions about what might be the catalyst for such a move. Could there be something looming on the horizon that we're not fully aware of yet? Let's take a closer look at the gold price chart. As you can see, gold has been steadily rising in recent years, but this latest move really stands out. Historically, such aggressive price action often coincides with significant uncertainty or market disruptions. For decades, gold has served as a safe haven during economic turmoil, so this recent surge is definitely worth paying attention to. The Federal Reserve's decision to cut interest rates by 50 basis points is also adding fuel to the speculation. Typically, such cuts are made to stimulate a slowing economy or to prevent a recession. Some economists are warning that despite the Fed's efforts to stabilize the economy, it might be too late to stop a recession. In fact, some are saying we're already in the early stages of an economic downturn. Renowned economist Peter Schiff weighed in on the situation, suggesting that investors should anticipate further gains in gold prices. He linked the surge to broader economic factors, including the growing national debt, inflation concerns, and the Fed's decision to cut interest rates despite inflation levels already exceeding the target of 2%. Schiff believes that as inflation rises, more investors may turn to gold as a way to preserve their wealth. This increased demand could continue to drive gold prices higher in the coming months. Now let's talk about what this could mean for other asset classes, particularly cryptocurrencies. There's been an ongoing debate about whether capital might rotate out of gold and into faster-moving assets like Bitcoin and other cryptocurrencies. However, if the gold rally is indeed signaling a Black Swan event, we could actually see the opposite happen. Investors might flee riskier assets and seek shelter in traditional safe havens like gold. It's worth noting that gold is now comfortably trading above the $2,500 support level. Many analysts believe this could serve as a springboard to push prices even higher, possibly reaching $3,000 per ounce. In fact, experts at Bank of America have suggested that the rally still has room to grow and could indeed hit that $3,000 target. So, what should investors do with this information? First and foremost, it's important not to panic. While the gold rally is certainly noteworthy, it doesn't guarantee that a Black Swan event is imminent. However, it does serve as a reminder of the importance of diversification in your investment portfolio. If you don't already have exposure to gold, now might be a good time to consider adding some to your portfolio as a hedge against potential economic turbulence. This doesn't mean you should go all in on gold, but rather consider it as part of a balanced investment strategy. For those who are already invested in gold, it might be tempting to take profits at these record high levels. However, if the analysts are correct and we do see prices push towards $3,000, selling now could mean missing out on further gains. As always, it's important to consider your own financial goals and risk tolerance when making investment decisions. It's also worth keeping a close eye on other economic indicators in the coming weeks and months. Watch for signs of slowing economic growth, rising inflation, or increased market volatility. These could all be potential signals that the concerns about a Black Swan event are warranted. Remember, the key to successful investing is staying informed and being prepared for various market scenarios. While we can't predict the future with certainty, we can take steps to protect our wealth and position ourselves for potential opportunities. If you guys enjoyed this video and want to learn more about protecting your wealth during uncertain economic times, then you're going to love my video on Recession 2024. Are you prepared for the 14% risk? In that video, I break down some of the best companies to invest in that tend to perform well, even when the economy is struggling. It's a great companion piece to this discussion on gold and potential economic turmoil. You can find the link to that video in the description below or in the end screen. Thanks for watching, and I'll see you in the next one.